All right, guys, it's 2026, but we got to take a quick moment and look back at 2025 so you have perspective and detailed information about what happened then and how it's going to shape 2026 and what you need to know to be best prepared and successful in the new market. So let's get after it. All right, guys, we're so excited as every year to kind of wrap up what we saw in 2025 and talk, maybe even more importantly now, about what's going on in 2026. We do this every year, and thank you guys, everybody, for watching us on YouTube. And you know, we'll get you access to the annual market report that we're driving here, but we're going to just give you a quick video kind of review and overview of what we're seeing on that. You know, last year, Chris, everybody asked, well, how's the market? How was the market last year? What's the best answer on that?
The market last year was kind of as we expected it to be. I think we reported on our predictions for the market at the tail end of last year. We were concerned or spoke to inventory. We spoke to interest rates. We spoke to cost and things like that. Mm-hmm. No big surprises happened over the course. But what we did see and what we kind of predicted to see and what we expect to continue and to monitor is inventory.
Yeah. So, you know, you think about, before we talk about inventory specifically, this concept of pixelization. And honestly, I think if you took any given set of buyers in 2025 and any given set of sellers in 2025 and said, what was your read on the market? It kind of depended on where they behaved, like where they transacted. We call that pixelization, as you guys know. And the reality is, and if you look at our market report and you look at the specific areas review, there's a lot of variable data there.
Yeah, I mean, just in our MLS, we got 42, something like that, different market segments identified, different neighborhoods identified, and they're all behaving a little differently. Now, there are themes, and that's what we kind of look for, but if you're looking at the market in Sea Pines, it might be performing differently than the market in, say, Berkeley Hall.
Right.
And there's some markets that might not have as much activity that's taking place. So small changes in activity might really inflate a big number. So when you're looking at averages and things like that, that all comes into play. But they all kind of behave a little differently.
And I love that about what's in the market report with that area's review is because, and we talk about that, just like you said, you can look at averages all day long. Pixelization says you got to get into the particular market neighborhood. And when you do that, you see a pretty big array of monthly housing supply, average sales price to list price ratio, amount of transactions that changed from 2024. So if you're really interested, you got to look at the report because it's going to show you what happened in Sea Pines versus Palmetto Hall versus some other segments of the market all across this broader Hilton Head, Bluffton area.
That's so important. And that report has each neighborhood is brought out independent of the others. So it's extracted out and you can track the things that you're mentioning. Some of the key things we're looking at in each neighborhood on top of monthly housing supply is that relationship between sale price to list price ratio and sale price to original list price ratio, because we're trying to get an idea, is the inventory in each market segment, is the inventory increasing? Is it staying steady? What's the difference between new inventory and inventory that is just building in the background?
And that data on the original list price isn't always as readily available. We oftentimes have to dig at that. And what we're talking about there, just to be clear, is original list price is where you came to market. List price is where you left the market, where you just got sold. The difference in that, oftentimes, and we keep seeing this time and time again, certainly in 2025 more than we have in any other recent years, price adjustments, price reduction, repositioning, et cetera. So that comparison is really important to track.
Yeah, when the original list price to sale price ratio is consistent with the sale price to list price ratio, if they're kind of close together, what that's telling us is not a lot of price drops.
Right. In that market, they didn't have, that gap didn't exist.
But when the gap is bigger, then what that's telling us is sellers are looking to reposition listings to find where that sweet spot is.
Yeah.
Price reductions don't always mean a market is going down. It's not tanking. It just means that maybe the price, it was priced incorrectly off of a trajectory that's maybe looking in the rearview mirror as opposed to looking in front of you.
We see that sometimes, and we saw that in 2025. And I think sellers, a takeaway, need to be careful about what that pricing trajectory looks like. You mentioned that look in the rearview mirror means like, I still think it's 2023. I still think it's maybe even 2024. There's been changes there. And if you're pricing on that trajectory and the market has peaked and gone in a different direction, well, then you may be really off track, right? And that's a challenge. And especially when we turn to inventory, when you think about that relative to inventory, what's the big challenge there? What's the big upside for buyers in terms of inventory?
Well, more inventory, buyers have more choices. More choices, they have more confidence. They're not stressed that they've got to make decisions really quickly. We're also seeing the mentality of a buyer. If they're not seeing exactly what they want at the price that they want, they're waiting.
Right.
We're getting inbound requests from other agents, our agents, buyers looking for something specific. They're ready to perform, but they're not seeing exactly what they want at the price they want in the market. So what's happening? Agents are starting to communicate behind the scenes. Look, I've got a buyer that's ready to go.
Right.
This is what they're looking for. It's not currently on the market.
Right.
And as opposed to back in the pandemic era when everything was on fire, buyers were like, I just want something. Anything. I'll just grab anything.
But you look at inventory, and that's one of the things in the market report is we look at inventory last year up double digits. Okay, so the number of new listings that came on the market compared to 2024, up over 10%, right? But again, pixelization corrects that a little bit and says it kind of depends on where you look, because some places still don't have a ton of inventory. There are still buyers, and you might be one of them saying, guys, you keep talking about inventory, but what I want, it's not plentiful. And then other segments, it's overly plentiful. And so what ends up happening, you talk about that's flow inventory, which means like what's coming on the market. Let's talk about static inventory. What happened to that last year, and why is that meaningful?
Well, static inventory or outstanding inventory, the overall inventory is up 11.3%, which is a little bit higher than the flow inventory, the new inventory coming to market. So what does that mean? There's some inventory that's hitting the market that's not getting absorbed. Right. And so that's something that we're watching, that relationship. Another thing that we're paying close attention to is supply quality, inventory quality versus inventory quantity.
Right.
If you get a flood of new inventory, but it's not what the buyers are looking for, they'll wait.
Right. Yeah, sure. And you think about, okay, so let's move on to condition, right? That's really a big theme of 2025, and frankly, a big theme moving forward in terms of serious sellers needing to pay attention to this. What's the condition issue? What are buyers really looking for, and what are they not looking for?
Well, as a market shifts towards a buyer's market, the expectation on condition is elevated.
Sure.
Buyers want what they want.
Right.
They don't want to fix things. They don't want to repair things. And if they're going to have to do stuff like that, it better be attractively priced.
Right.
Because not only are they having to absorb the expense of that, but they're having to find the contractors. It's about the time of money.
Yep.
The time value of money, things like that come into play. They don't have immediate use of it. I mean, we're in a luxury marketplace, a lot of properties in Hilton Head, and we got this beautiful spring coming right around the corner. Buyers want to invest now so that they can enjoy the property in the spring and summer. They don't necessarily want to do a big remodel project right now.
They haven't wanted to do that, honestly, for years now. Just seems as though the appetite for those projects isn't present. So the message to sellers in 2026 is get your house in order, right? I mean, literally and figuratively, think about that. Study the inventory that you're competing with, and also in the microcosm of your particular market area segment, what does that look like so that you can make sure, we're kind of back to that. You got to win the pricing war and you got to win the beauty contest. We're coming back to those things that we used to talk about in a slower market time.
I think it's going to be a great year with a lot of activity taking place. And I can tell you right now, whether you're a buyer or a seller, the market participants that are paying attention to what's in front of them, they're paying attention to their submarket, they're paying attention to the changing trends. Buyer or seller, the one that's most knowledgeable and tracking that the best, they're going to win.
Yeah,
they're going to win.
Because we're not expecting big changes in 2026. We're watching interest rates. We're watching the overall market. Demand continues to be present. We're not seeing a huge influx of inventory. When I say that huge influx, we're not expecting that. We think it will continue to build. We think that static inventory will continue to build. So I think buyers and sellers that are prepared, doing their homework, paying attention, getting good counsel are probably gonna have the best market experience in 2020.
I think a word just to think about is calibration.
Yeah.
I think this is going to be a year of calibration. We've got to continuously track and fine tune and adjust. I don't expect any big surprises in 2026. I don't expect any shock waves to happen. I think everything that we've talked about is kind of coming to a balanced scenario.
Yeah, we're a little bit more of a normal market, right? This is sort of the new normal. All right, guys, listen, thanks for paying attention. Again, check out the fall market report. There's a lot of good information and details on that, especially if you want to drill down into particular market segments. As always, we appreciate you paying attention to us on YouTube. We appreciate all the great feedback and comments we get on these videos, and we'll continue to see you throughout 2026.